Alrighty. We got Nike earnings in about an hour. So that should be exciting, maybe. I don't know. I saw a bunch of streams started streaming these earnings, so not gonna get when people do that, when people steal my content, we don't get as many viewers, unfortunately, but we'll see what happens. I saw Benzinga started streaming these earnings, probably because they saw my channel, which is, I don't know. It's whatever. I guess that's the name of the game. You find something good and people steal it. What's up, Muma? How you doing, bro? Spread the word, web means back up on that motion again. Playing Arc Raiders. You're obsessed with that game, bro. Every time you're on here, you're playing that game. You're obsessed. Obsessed with the Arc Raiders. Damn, crypto dropped below 85. Is that a lower low on Bitcoin? I think that's a lower low. Yeah, that's a low. Well, close. It's a lower low for the past, like, couple weeks. Since the first. But yeah, looks like the lower low would be like 75-ish. So not quite a lower low, but broke 85 on the shorter term trend. That's a lower low, just not on the medium term trend. So that's kind of interesting, I guess. Damn, Ethereum's down 12%. A lot of these cryptos are down a lot. Good lord. Good lord. Crypto's getting clapped. Pretty interesting. Pretty interesting. I mean, it's... Yeah, I don't know. I don't know. If any of you have been here for X amount of time, for a decent amount of time, you know how I feel about crypto, but pretty interesting to see it selling off like that. Get off work, lift, then game. Routine guy. Same. I just don't really have a... I mean, I do have a routine, but it's a lot easier to be in a routine when you have, like, a normal job, I feel like. Too cold to do anything. Yesterday I rode the one wheel. Is nice for once. Yeah, it's been pretty cold here too, but surprisingly not that cold. Oh, Trump signed the executive order to reclassify weed. So what does this mean? It's just so they'll be able to study it more and stuff. It's gonna be interesting when they start doing these studies and it turns out that weed's like actually bad for you. It's gonna be interesting when they actually start doing real studies on this shit and they figure out that it's terrible for you. Let's see. Executive order reclassifying marijuana, loosening long-standing restrictions on the drug, marking the most consequential shift in U.S. cannabis policy in more than half a century. The order, once finalized... Oh, it hasn't been finalized by the DEA. Okay. Once finalized by the DEA, moves cannabis out of Schedule I classification, the most restrictive category under the Controlled Substance Act, to Schedule III, which encompasses substances with accepted medical use and a low potential for abuse. That's debatable. I know a few people that abuse this shit. This action has been requested by American patients suffering from extreme pain, incurable diseases, aggressive cancer, seizure disorders, neurological problems, and more. including numerous veterans with service-related injuries and older Americans who live with chronic medical problems that severely degrade their quality of life. Also on Thursday, Centers for Medicare and Medicaid Services is expected to launch a pilot program in April, enabling certain Medicare-covered seniors to receive free doctor-recommended CBD products. That's interesting. That's kind of weird, actually. It's actually really weird. Free? Huh. I don't like anything that's free. I always have questions when things are free. Which must comply with all local and state laws on quality and safety. Products must also come from a legally compliant source and undergo third-party testing for CBD levels and contaminants. Millions of registered patients across the U.S., many of them veterans, rely on cannabis for relief, chronic debilitating symptoms. Commend the administration for taking this historic step. Reclassification is viewed by many analysts as financial lifeline for the cannabis industry. Move exempts companies from IRS Code Section 2080E, allowing them to deduct standard expenses like rent and payroll. Oh wow, that's actually really interesting. Allowing them to deduct standard expenses like rent and payroll for the first time. It also opens the door for banking access and institutional capital previously sidelined by compliance fears. Many on Wall Street expect the changes in the Medicare pilot to draw major pharmaceutical players into the sector to chase federally insured revenue. Yep. While CBD has surged in popularity in recent years with infused consumer goods ranging from seltzers to skincare, FDA has stopped short of granting the compounding its full backing. Inconsistent benefits for targeted conditions, while FDA-funded research warns that prolonged CBD use can cause liver toxicity and interfere with other life-saving medications. Interesting. FDA has only approved one CBD-based Epidiolex for rare forms of epilepsy. I want to emphasize that the order doesn't legalize marijuana in any way, shape, or form, and in no way sanctions its use as a recreational drug. Huh. Okay. So nothing I didn't know already, I guess. Except that one part. Whatever it was. I already forgot. I already forgot. I knew about this IRS thing. Oh, yeah. I knew about the IRS thing. It should make banking easier for them, but I didn't know that it was making it so they could deduct expenses. That's pretty interesting. That could help some of the businesses, potentially. But a lot of those businesses are like, I don't know. I don't think that's going to help them, but we'll see, I guess. The market seems to think that it's going to help them for some reason. Weed's legal? Nah, it's not legal. It's not legal. What's up, Ruben? I thought this was interesting, even though I usually don't find this stuff interesting. It says, option expiration days are a monthly occurrence on Wall Street when the contracts on short-term derivatives expire. Friday happens to be one of the rare times, 4 times a year, when options on 4 types of securities expire. Oh yeah, the quad witching, whatever. More than $7.1 trillion in notional options exposure is set to expire this Friday, including roughly $5 trillion tied to the S&P 500 index and $880 billion linked to single stocks. December option expirations are typically the biggest of the year, but this one eclipses all prior records. To put the scale into context, the options expiring Friday represents notional exposure equal to about 10.2% of the total market cap of the Russell 3000. That dynamic could lead to choppy trading, particularly around heavily watched levels in the S&P 500. I'm expecting volumes to be well above normal as option traders finalize 2025 profits and losses, but a lot of the reposition seems to have already taken place. 6,800 is a big strike price in the S&P, and we'll see if the bulls can defend that level after pushing the market back above it. With the broader market could have heightened volumes and volatility, some individual stocks with large open interest could see different scenario. If option traders who hedge their positions are sitting on a large amount of at-the-money options, the activity tied to those contracts expiring can actually calm price swings rather than intensify them. Options that are at the money have strike prices that are equal to the current price of the underlying asset. As traders adjust their hedges, prices can be pulled toward heavily traded strike levels, a phenomenon known as a pin, leaving stocks hovering near key levels into the close. This situation is often referred to as a pin and can be an ideal situation for large investors trying to enter or exit a stock position. And then, this is why I'm reading this, stocks with options expiring Friday that represent a large share of their typical daily trading volume and could be prone to, quote, pinning include Gene DX Holdings, Bill Holdings, Avis Budget, and GameStop. So that's kind of interesting. Usually I don't personally care about like quad witching and that stuff, but I guess it's a record one. And the fact that they mentioned GameStop in the article, you know, pretty interesting. I would say GameStop's already pinned, so like if tomorrow's going to be a big day in the market, what's going to happen? Like, what's the volume going to be like on GameStop? Because they're expecting a lot of volume. You know, normally I don't care about this stuff or even take it into consideration, but a record quad witching could be interesting. I guess we'll find out. You're in California? Nice. What are you doing in Cali, bro? I'm going back to Cali. Going back to Cali. I'm going back to Cali. No, Burry's not gonna drop that for like 2 or 3 weeks. I live here was telling Muma. Oh, I didn't know that. I honestly thought you were a foreigner. I didn't know. I didn't know you lived in the U.S. I thought you lived in a foreign country. I'll be honest. I just assume everyone here lives. Everyone in the chat's in a foreign country. I just kind of assume everyone in the chat lives in a foreign country. Straight up. I never knew that, though. And maybe you told me and I forgot, but that's interesting. I see. I feel like it. I've heard California isn't the best right now. I'll save that article. And go spread the word. Webby's back up on that bullshit again. If you're a pussy, then you better run and hide. So go tell your friend, Webby's back up on that bullshit again. And this time I think I've truly lost my mind. What the hell? 2-year gaming marathon? What is this? A hardcore gamer is being branded as a hotel guest from hell after leaving his room in such a mess it would make Asmongold blush. Shocking find was made after the man finally checked out of the hotel in Changchun after over 2 years, where staff say he spent nearly all of his time gaming inside the room. Video footage showed online shows the space buried under thousands of dirty food wrappers, empty drink bottles, takeaway containers, trash piled up to the 3 feet deep in some areas. Let's see. I don't really want to read this. I just want to watch the video. Holy. How are you gaming in that? Do you think he streamed? Guest still owes more than 10 days in unpaid fees, totaling $400. How much would it cost to live in that hotel for 2 years? I feel like that'd be a lot. What's up, Marius? How you doing, bro? Nah, Nike earnings was 3 months ago. 3 months ago. Or 4, whatever, last quarter. I can give you the exact date. I can give you the exact date of their last earnings because we streamed it. 10 days for 400. No, that was 10 days unpaid. That's what they were talking about. He owes $400 still. But I guess if you're doing 10 days, $400. Oh yeah, you're right. You're right. You're right. You're right. That makes sense. Anyway. When he's back up on that boat. September 30th. So it wasn't that long ago, actually. Wasn't that long ago. Spread the word. When he's back up on that bullshit again. I got fucking Chris Webby stuck in my head. 11 weeks felt like 3. Oh man, I wish I could say the same thing. I feel like it's been a year. Nike's gonna miss earnings. Maybe. I don't really track Nike, so I don't really have an opinion on it, but they've been doing a lot better. Spread the word. There's nothing on Reddit as usual. I thought there was something, but I guess not. I guess not. Nothing on Reddit. So, yeah. I should have started the stream a little later, apparently. Because there is literally nothing going on. This is insane. There's no news. Oh yeah, I guess inflation came in low, which is very surprising. I guess the Fed was right. I guess a lot of the recent inflation has been because of the tariffs. But yeah, pretty interesting to see. I would never have agreed, but that's why I always say the Fed knows more than I do. That's why you got to just listen to Jerome. You know, you can have your own opinions all you want, but Jerome's that guy. Jerome is that guy. Sad that is his last quarter, though. Wasn't there another inflation thing coming out today? Could have sworn. Oh, that was Japan, I guess. Okay. I think I'll finally be able to trade options. I wouldn't recommend it. I would just learn how to day trade shares so you can actually make money. I don't think options are worth your time. I'll be honest. But you do whatever you want, my friend. I just, I've traded a lot, and just trading shares is way better. Michael Casper. It's been a while, bro. It's been a while, Michael Casper. I hope you're doing good. It's a hassle to get those in the EU. Really? Huh. It's so easy to be able to trade options here. Like, I feel like they would rather you trade options because it's honestly a losing game in a lot of ways. It's like when you think about it this way. When you place a bet on the market, it's 50-50 almost every time. You know, there's certain setups where potentially it could be in your favor. But when you're trading options, It's more like 40-60 or 45-55. Like, it's, if you want to be a profitable long-term gambler, you want the probabilities to be in your favor. So it would, from a statistical perspective, it would make much more sense to just trade shares. But I will say, you can have interesting gains on options if you do it correctly. It's just, it's just a different type of bet. Like, it's kind of more like a deep value type bet where you trade cheap options and you expect like 9 of the options are going to lose, but you're going to make 1,000% on one. Like, you can trade it like that, but I don't know. Just from my experience, I don't know anyone who actually makes money trading options. I know a lot of people that trade options and act like they make money, but I've never met anyone who actually is profitable trading options. So, I'm just giving you my experience. You do whatever you want. You're just better off, from my perspective, learning setups and trading shares with solid risk to rewards. All this rain here. Pineapple Express. Nah, this guy gets Snickle Fritz. Where do you live, Michael Casper? Where do you live? Portland, Oregon. Ah, that makes sense. That makes sense. Okay, so not everyone is a foreigner. We do have Americans. All right. See, I thought everyone was foreign, straight up. Interesting. We're global, baby. We're global. This is a global stream. There's GameStop degenerates everywhere. Might be a good reason why they make it hard and easy here. Hey, Moose. Moose. What's up, Moose? You need 25k free cash or longer history in your broker. Oh, interesting. I mean, in the US, you need 25k to day trade. Or, well, you can still day trade, but you have like a 3-day trade limit. I don't know the time limit on it, but yeah, if you want to day trade like whenever you want, you need 25,000. I got a Cohen head now, handsome devil. Damn! I didn't even notice, bro. I didn't even notice. 12 or a whole year, Moose. A whole year as a member. That's crazy, bro. That's crazy. A whole year. That's actually nuts, bro. I appreciate you. Thanks for supporting the stream. That's wild, bro. That's actually wild. I can't believe you've been a member for a year. I'm underwater here. Use options only to hedge in some very rare cases. Or just gamble instead of slots. That's fair. That's fair. I just like seeing people, like, make money. I like seeing people learn how to trade properly so they can make money for the rest of their life and not just gamble, you know what I'm saying? Like, gambling's cool, that's fine, but, like, I want to see people make money. So that's why, that's why I'm saying what I'm saying. Because if you learn the wrong strategy, sure, you might make money, but over the next, like, 5, 10, 20 years, are you going to make money that way? It's up for debate. It's definitely up for debate. Even trading properly, it's up for debate whether you'll win or not. Getting so much rain here. Interesting. Interesting. It has not snowed, like, at all where I'm at, which is pretty wild, being mid-December and no snow. Well, it did snow once, but it melted literally the next day. Does New York count as foreign? No. You're in New York, interesting. That's crazy, bro. We're literally all around the world. We global, baby. All around the US and Canada and Europe. We're global. We global, baby. Isn't Hugh New York? Yeah. Yeah, I believe Hugh's in New York. Why do cows always lie on each other in the rain? To keep each other dry? Wait, you can't see my knee. You can't see my knee. That's a knee slapper. That's a knee slapper. Trump media up 45%. I think the some AI investment, I think. I saw the news piece on it. Yeah, Trump media is merging with TAE Technologies. Some AI shit. Did you guys see fucking Coinbase added a prediction market and a stock investing thing? Did anyone else see that? I thought that was weird. Hold cash, invest. Yep. Have you noticed how much GME is a reverse NVIDIA? Nah, I don't really watch those individual stocks. I'll check the price every now and then. Gamestop is probably the only stock I really pay attention to. The rest of the market, I kind of just look at it every now and then. Global spicy. Switzerland, well, welcome, Levin. Earnings are at the end of the market here in like 30 minutes. Every day it's red, we green. Well, usually when NVIDIA is red, the whole market's red in general. But it's just rotation, realistically. Like, when you really think about it, it's not just GameStop that's up. Whenever tech is down, usually other sectors are up, which, you know, GameStop's in retail, so I guarantee anytime NVIDIA and all the other tech stocks are down and GameStop's up, I'm sure, like, Chewy's up, I'm sure, like, Kohl's is up, you know, you name it, any retail stock you can think of. It's just the rotation of the market, like... I can't believe how everyone's promoting gambling. It's because it's, I mean, that's how these, it's the easiest profit. Straight up. It's such easy profit. Like, all this AI stuff, there's no guarantee that that's going to be profitable in the future, I don't think. You know, there's a lot of speculation on it and potential that it could be. But gambling's always going to be profitable. Who's the GME girl again? I thought I saw a short clip with her in the pic. I have no clue. I don't really pay attention to that. I don't know what that's all about. She just used to... I think she went viral on a Best Buy commercial or something. And that's why GameStop's using her for marketing. I honestly don't know, though. I have not followed that at all. Is there a rise in the self-harm death rates now that gambling's being promoted? Yeah, there's that one video. There's that coffee. There's a new CoffeeZilla video. Or I don't remember if it's that video or what video. I watched a video recent. I think it's actually Papa Meat. Papa Meat made a video about prediction markets, or yeah, sports betting. and that video is actually pretty interesting. Papa Meat makes some okay videos, but I don't want to watch it right now. But oh yeah, for sure, bro. People take gambling way too like. People take gambling so seriously, bro. Why do you like what think about like why people are so upset in the stock market all the time when things go down? It's cuz like none of these people actually care about the things they're investing in. They're just gambling. And when you lose on a gamble, you get upset and you say the stock's trash and you talk shit and blah blah, you know. That's most people. Most people can't take a loss. So, definitely. I don't think bad about those do, but to me, money's a tool, and I can't take the risk on gamble when I know if I put money somewhere and wait, it'll more likely go up. Yeah, definitely. I mean, you're still gambling. It's just probabilities. Like that's what real gambling's all about, you know? Like most people gamble for fun. You know, me personally, I gamble to make money. And I gamble. When I take a gamble, I want the probabilities to be in my favor. And if the probabilities aren't in my favor, I better be getting paid enough to take the risk. Like I'm trying to make money when I gamble. I don't gamble for fun. I don't find gambling fun personally. I find making money fun. But I guess that's, you know, that's why the gambling industry is so profitable, because so many people do find gambling fun and they don't care about making money. Which is fine, but I don't know. If I'm going to gamble, I want to win. Do I remember Playboy? Is that even a thing? It was huge? I don't think so. Hugh Hef died. I remember Playboy was on the stock market, though, and it went up a lot. But I haven't looked at it since then. Every second of my life is a gamble. Yeah, but don't you want to win? Don't you want to win the gamble? I feel the same way, but I want to win. Varley, what's up, Varley? How you doing, bro? Let's put it all on black. In life, yes, I want to win. In slots, I want to lose with good time. See, I don't feel the same way. I want to win. Casino's trash. I feel sad or something. Then I would never go there. Yeah, I just don't understand the, like, I can't relate to the mindset of like gambling being fun and like losing being fun, you know? I can't relate to it because I've lost more money gambling on slots than probably anyone that I know. And I've made a fuck ton of money sports betting, and I've lost a lot in the stock market, and I've made a lot in the stock market, and I've just have enough experience to know that losing is not, I don't know, going in with the mindset of like losing, I just can't do it. I got to make sure like it's set up for me to win. Even if losing is the most probabilistic outcome, the potential win has to outweigh what I'm about to lose, I guess. Fun of gamble comes from our own chemicals being released. Some people get the high, some don't. My brain release some BS and I have fun. Yeah. I just don't get it because it doesn't like I don't know why, but slots don't give me like that like excitement. Gambling in general doesn't give me that excitement. Winning's exciting. I like winning. But if you have fun gambling, all power to you, my friend. All right, let's see what this says about Nike. Wall Street eyeing the sneaker company, blah, blah, blah. Sneaker company is just over a year into CEO Elliott Hill's turnaround strategy, focusing on regaining its growth and market share, clearing out old inventory, and investing in wholesale relationships. EPS is expected 38 cents. Revenues expected 12.22 billion. In Nike's first quarter, Hill reported positive developments in the company's turnaround, citing improvements in wholesale, running in North America. But Hill noted the other areas like its China segment and direct business have not been performing as well. Nike also been taking hits from tariffs. Company said it expected tariffs to cost $1.5 billion and impact gross margin by 1.2%. Increase from $1 billion and 1.75% hit in the expected earlier this year. Expected gross margin for second quarter to fall between 3 and 3.75%. Nike also underwent leadership changes to remove layers. Under its Win Now strategy, company announced the chief commercial officer, Craig Williams, would leave the sneaker giant. These changes amount to us limiting layers, better positioning Nike to continue, have an impact the way only Nike can. Reported a strong start to the Nike Skims partnership with Kim Kardashian's shapewear brand. Okay. Jackpot would be the same as yours. Spread the word. Think about this though. What if you could delay gratification? And you know, I don't know how gratifying gambling is, but what if you could delay it? What if instead of losing $1,000, $2,000 gambling, you could put you could put that same $1,000, $2,000 into GameStop, turn it into $10,000, $20,000, and then 5, 10 years from now, you could go gamble high stakes and potentially make 6 figures if you hit a jackpot, rather than gambling $1,000 and sure you might get lucky and make like $5,000, $10,000. You know, that's like where my mind goes. I would rather invest and try to make as much money as I can, so in the future, the higher risk gambles have a exponential return. $10 more shares of GME today. Nice. I sold 20 shares, I think. I don't know. I sold a few shares at 23. Been trying to raise some cash before the year ends because I don't know if I'll be trading it all next year. We'll see. Depends if the stock goes up at all. $1,000 pull, Power Packs gamble. See, Power Packs is shit though. Like if you're looking, Power Packs is a garbage gamble. Risk wise, it's not that bad. But you could go put $1,000 in Ultimate X, bet $100 a hand, and you have potential to make a $20,000 to you minimum. A minimum jackpot is like 5 to 20,000, and then you have a crazy insane maximum jackpot of like $500,000 or something like that, or it's like 200. I don't know exactly how much it is, but risking $1,000 on GameStop power packs is garbage. Like, the upside really isn't that good when you compare it to other things. And the likelihood of you hitting a chase card on power packs is probably just as likely as hitting like the 6-figure jackpot on $100 bets. So it's like, I don't know. I just yeah, your max win on $1,000 bet of power packs is 15 grand. I don't like that. I don't like that. If I don't like that. And $100 bets at $1,600, like, it's not enough. It's not enough. Power packs is a terrible gamble when you look at it. If you are an experienced gambler and you've gambled enough, power packs is a shit gamble. It really is. The risk is low, potentially, because if you hold the cards, you'll probably make your money back, maybe. But I think power packs is a terrible gamble when you compare it to other things. Hugh G, what's up, Hugh G? My gamble's like 1% compared to what I put into the stocks. That 1%'s enough to satisfy all this gamble stuff because of CSGO. I mean, that's not really the point I was trying to make, though. If 1% is 500 or $1,000, that 500 or $1,000 in 10, 20 years could be worth a fuckload. Like, it could be worth a lot. And then you could, like I said, you could take a higher risk gamble in the future with a much larger outcome, and you're taking essentially the same risk as if you would have gambled it now. It's just, I don't know, delaying the dopamine, I guess. But I guess we all have different goals, I guess. You know. And I've lost a fuckload of money gambling slots, so I'm just never going to understand why people do it. Now I'm a collector. I mean, Pokemon's worse. If we're being 100% honest, Pokemon is potentially worse than gambling. At least pulling the cards and stuff. It's probably worse than gambling. Kids grown up in a gambling world. Dad was a semi-poker pro. Then you should, you should understand the concept of professional gambling if you've been around someone who's a professional gambler. But even poker pros lose. Like, there's that one guy, I forget his name, but he's down like $1 million this year or some shit like that. I forget his name. He's one of the top poker guys. Gambling was in my life since I was 8. Same. I grew up around slot machines in Vegas and cigarettes and fucking degeneracy. It's not really, that doesn't make it who you are. You know? Just because you grew up around it, it doesn't mean that's who you are. Survive and thrive. What's up, bro? Been a while. I hope you're doing good. All of us need something that's not smart to do. I guess. I don't know. I don't know. I agree, but I also don't. I think you should try to minimize the things that are bad for you, no matter how much you like them. And, I'm talking to myself as well. I do it. I try to do it. Doesn't mean it happens. Same mentality as I do now. He'd lock in to win most of the time, but he would play for fun, small stack. He's moved to sport poker and ended on plus overall. Oh, that's dope. That's dope. Do well with the World Cup next year. I don't think that would matter. It's a small piece of a multi-billion-dollar business. If I just don't think that would matter. But maybe. Maybe. And poker's like a whole different game. Poker's almost not even... I mean, poker is gambling, but poker is like a lot of psychology and being able to read other people. Poker is much more than just playing cards. That's a whole different thing. That's being good at a poker is that's an interesting skill. But I guess at the end of the day, if you enjoy gambling, then run it up. I just can't relate. I just don't understand the joy of gambling. I wish I could. Last time I looked at Nike was last earnings stream. Yeah, same. Same. How did it perform last quarter? I think it's the same price as last time. Straight up. Earnings was September 30th. Yeah, it's low. It performed not great. You were at $69. So it's basically the same price, but it went down this quarter. But they are turning around, if I remember right. So potentially this is a undervalued investment. Potentially. Should we gamble? All this talk about gambling. Should we gamble? Oh, shit. 30 cents. It's not the best. I mean, it's not like crazy undervalued or anything. Yeah, it really hasn't moved at all. I mean, I'll give you a little option lesson if you want. I know a thing or two about a thing or two of options. YOLO and options on earnings. Like a complete degenerate. Yeah, it's been kind of sold off. Not really. Sold off a little bit the past week. So this should be a good example of an option. Oh wow, GameStop's selling off. You broke where the stock's been bouncing the past little bit of this run up. You broke that. You rejected the longer term bearish trend again, which we've talked about multiple times. Pretty interesting to see that still playing out. But the sell-offs are getting light. Like the last sell-off was only 8%, 9%. So I would expect this sell-off only to go maybe 6-7%. Probably hit like 21.6 if it's going to go that low. But we'll see. If it starts selling off crazy, that would be interesting. That would be interesting if it started selling off massive. But let's see. So Nike, let's see. You're filling this gap here. I just want to see what we got. All right, none of that's really important, but if you go into options, I think I've talked about this before, and you go to the weekly options, not the ones expiring tomorrow, but next week. And oh, this is GameStop, so we gotta go Nike, and you can see 6-7, 6-7, 6-7. God damn it. You can see the calls are trading like 235, and the puts, or the at the money calls are trading 235-ish. At the money puts are trading 220-ish. You add those together, it's about $5. So the estimated move on Nike's like $5, which you can see it right here on Thinkorswim. It shows you. So you add the at the money options. That's what the market's expecting, is a $5 move, and you're trading at 66. So a $5 move would either be 71 or 61. So if you wanted to gamble on something like this, you could buy a 71 option, and that's, potentially where the market's going to go. And if it did, well, you could buy the 71 call or the 61 put. That would be, a decent gamble, because that's what the market's expecting. Or you could think the market's wrong, and you could think maybe it's going to move double that, or maybe even triple. So you could potentially buy even cheaper options. I don't know if, the puts would be a good idea on this, but who knows? This is the whole point of gambling options, is you either trade at the money for the best odds, or you pay cheap. You don't really pay that much, and you try to gamble on a unexpected move, at least for earnings. It's tough to do this without some sort of catalyst. So you could gamble on something like this, like if you think Nike for some reason is gonna miss by a ton, and you think it's gonna move more down than $5, like you could bet, this 58 put for $30. And, if if Nike ends up missing earnings bad and it moves more than the $5 it's expected to move, like that could hit, that $30 could turn into like $200 or something like that. And then if it went down even more, like that $30 could turn into like $500. But, the odds of this hitting is extremely low. That's why it's $30, But that's a interesting way to gamble on earnings, is bet on a unexpected move for cheap. And like I said, and that's a viable strategy in a lot of ways. You make 10 of these plays, 10 of these $30 unexpected plays. You only need one to hit, really. You only need one to hit for break even. If two hit, you make a couple $100. Not, it's not a good idea. I don't think. Like, I don't do these bets anymore. I did these bets my first year in the market. So this is, in my opinion, how beginners trade the stock market, but doesn't mean you can't hit. It doesn't mean you can't hit. Well, and the market's closed, so you can't bet on it anyway. You can only trade options when the market's open, so it's a little too late now, but we'll see what happens, I guess. We'll see what happens. Alright, I need to get this earnings call ready. Or when does the earnings call start? Doesn't say. Spread the word. Baby's back up on that bullshit again. Let me get this. Let me get this ready. Okay. Should have that ready. But we'll see what Nike does here for the earnings. We will see. Hopefully they actually post the frickin' earnings, so I don't just have to get it from Reddit, or not Reddit. Hopefully from Twitter. Hopefully that I can actually get the report quick. All right. Make sure you guys hit that like button and share the stream. Sharing the stream is really valuable, so share the stream. Yeah, it's possible that they don't have good earnings, but even if they post bad earnings, it doesn't mean the stock's going to go down. The stock could go up on bad earnings, you know. Seen it before. You know, we've seen stocks sell off on good earnings and go up on bad earnings. Doesn't really matter what they post. Less for the long shot makes sense. Yeah, exactly. And you only have a week of time, so it's like it could hit a month from now, but if your option expires in a week, that's why I always say shares are better. Shares are the best. It's gonna head down to April 7th prices. I don't even know what that was. April 7th? Yeah, probably not. Probably not. It's probably not gonna move more realistically. We'll see though. We'll see though. Moose lost his job to AI. Oh, that bell has been there for a long time. Too slow. Felt more human. People go mad for buying Nike. Same in the US, I would say. It used to be more popular. There used to be a lot more shoe heads. I'd say it's lost its popularity quite a bit. Nike shoes used to be like Pokemon cards, like straight up. Maybe they still are. I don't really pay attention, but it used to be like impossible to get Nikes, or at least like the limited edition ones. Nike's a buy long-term investment. Maybe. It could be undervalued, or it could be overvalued. Nobody really knows. You know, I kind of agree with you, but it's very debatable. Very debatable. You could say that with any stock, but personally, I just think there's a lot of stocks that are overvalued that people like a lot. A lot of companies that are overvalued that people like a lot. And, you know, nobody will know whether they're undervalued or overvalued because it's literally just an opinion. Nobody actually knows. I'll go back to what that dude said that one stream, you know. Everyone has an opinion, but nobody knows what they're talking about, especially in the stock market. Everyone thinks they're a genius until 5, 10, 20 years pass, or even a couple years. You heard of balance sheet analysis? Yeah, Nike has what? 36 billion assets, over 10 billion in debt. So realistically, they only have around 20-25 billion in assets, and it's trading at a 97 billion market cap. Seems overvalued to me, but doesn't mean it is. 5, 10 years from now, we'll see. Yeah, I've heard of balance sheet analysis. Thanks for asking, buddy. Have you? Pokemon scalpers moving to One Piece scalpers. I did see One Piece is getting popular. Have they really not released the earnings yet? Guess not. FedEx reports today too. Whoops. Whoops. And yeah, FedEx is up 3%. Not bad. Not bad. What the heck? What happened? Oh, there it is. Where are these earnings? Okay. What does Frank Ocean have to do with the stock market? Curious what that has to do with anything stock market related. It's a weird thing to say. It has nothing to do with the stock market. What did Nike post? Or FedEx, I mean. Double beat, 4.82 EPS versus 4.12. 23.47 billion versus 22.8 billion. Nike's taking forever. Five minutes. All right. Good to know. Good to know. It's kind of what I figured. What other companies had earnings today? Heiko, BlackBerry. BlackBerry report. BlackBerry's up a little bit. I don't know if they reported. Doesn't say. They could have. Heiko? I don't even know what Heiko is. Never heard of it. This thing looks like it got bought out. Potentially. It's either bought out or it's just pinned. And it can't move. Yeah, it's not bought out. I think it's just been flat forever. Kind of looks like it got bought out, but not really. Little too much volatility for a buyout. But I have no clue what that thing is. I've never heard of Heiko. Never heard of it. There's people out there that just trade earnings. Yeah. It's an easy thing to gamble on. It's one of the few volatile events in a stock. So it's easy to bet on. Doesn't mean you're going to win. You know, most people lose, but it is an easy thing to bet on. And that's why people do it. Because you can just bet both sides and potentially make a lot. Especially if you think it's going to move more than what the market thinks. You know, you can have a cheap put, a cheap call. And then if you're, if by some miracle your play hits and you make 500%, it pays for the cheap put and some profit. But overall, I don't think it's a good idea to gamble on earnings. A lot of people would disagree because they're gambling degenerates, but it is what it is. Dude, is there like a bunch of people streaming this or something? This is not as big as last time. Doesn't seem like. Yeah, what? Bro. It's so stupid, bro. Anytime I find something good to stream about, there's a bunch of idiots always stealing it. There's a bunch of idiots always stealing it. Always stealing my ideas. Hey, it's going down a little bit. Still, I don't think the earnings is out yet, though. It's down 2%, but I don't even think the earnings are out yet. Oh, right here. What the hell? Why won't it let me? Something wrong with the website. Seeing the, I mean, I don't think the earnings are out yet, but the market was pricing in a $5 move and it didn't even move. So far, anyone who bet options at all just lost. Whether you bet, even though it's down 2%, the market, well, not anymore. Assume it stayed down 2%. Nobody, even somebody betting on the put side wouldn't have won because the volatility from the earnings would have pretty much outweighed the gains for the downside you captured. That is another thing about betting on earnings, is you have volatility baked into the option prices. So once the earnings is over, you're automatically losing if it didn't move. Let's see, revenue 12.43 billion versus 12.22 billion. EPS 0.53. So it looks like they beat on earnings, but stock didn't move at all. Oh, there we go. Nike reports fiscal 2026 second quarter. Second quarter revenues were 12.4 billion, up 1%. Wholesale revenues were 7.5 billion, up 8%. Nike direct revenues were 4.6 billion, down 8%. Gross margin decreased 300 basis points to 40.6%. Diluted earnings per share was 0.53. Nike is in the middle innings of our comeback. We're making progress in the areas we prioritize first and remain confident in the actions we're taking to drive the long-term growth and profitability of our brands. Fiscal 26 continues to be a year of taking action through Win Now, including realigning our teams, strengthening partner relationships, rebalancing our portfolio, and winning on the ground. We're finding our rhythm in the new sport offense and setting ourselves up for the next phase of athlete-centered innovation in an elevated and integrated marketplace. In the second quarter, we demonstrated the resilience of our portfolio, delivering modest top-line reported growth while managing headwinds from repositioning our business in a dynamic operating environment. We are making the shifts required to position our portfolio for a full recovery and driving real-time decisions in service of the long-term health of our brands. Revenues for Nike were 12.4 billion, up 1%. Nike brand revenues were 12.1 billion, up 1%. Wholesale revenues were 7.5 billion, up 8%. Nike direct revenues were 4.6 billion, down 8%. Nike brand digital, a 14% decrease in Nike brand digital, and 3% decrease in Nike-owned stores. Revenues for Converse were 300 million, down 30%. Gross margins decreased 300 basis points to 40.6%. SG&A increased 1% to 4 billion. Demand creation expense was 1.3 billion, up 13%. Operating overhead expense was 2.8 billion, down 4%. The effective tax rate was 20.7% compared to 17.9% for the same period last year. Net income was 800 million, down 32%, and diluted earnings per share were 0.53, a decrease of 32%. Oh, so they actually... Okay, interesting. Inventory for Nike were 7.7 billion, down 3%, reflecting a decrease in units, partially offset by increased product costs, primarily due to higher tariffs in North America. Cash and equivalents and short-term investments were 8.3 billion, down approximately 1.4 billion, as cash generated by operations was more than offset by cash dividends, bond repayment, share repurchases, and capital expenditures. Shareholder returns. Nike has a strong record of returns to shareholders, including 24 consecutive years of increasing dividend payouts. In the second quarter, the company returned approximately $598 million to shareholders through dividends, up 7% from the prior year. Okay. Good or bad? It's Nike. I don't have an opinion. I don't have an opinion on these companies that are tens of billions. And I don't track it, so. Would I invest in Nike? No. Probably not. Doesn't mean anything, though. Can't base an opinion off of an earnings report. You'd have to research way more, track the company more. I can't base my opinion off of an earnings report. I really can't. Nor would I. Because some people think, I don't know. Some people, it doesn't matter what I think. One person's buy is another person's sell. That's a good rule to follow. One person's buy is another person's sell. Gotta run. Carol singing to go to. Oh, nice. That'll be fun, bro. Enjoy. That sounds awesome. Enjoy. When does their earnings call start? Doesn't say. Is the it should be today, right? I'm pretty sure it's today. Yeah, it says it's today. Oh, it's not for another like 30 minutes. Got some time. What is this? Are these the warrants for Trump Media? The fuck? What is this? What is DJTWW? Can't find what these are. Yeah, I think they're warrants. Either warrants or bonds. I don't know, kind of interesting. I guess nobody cares about. How did the last Nike stream do? Wasn't there quite a bit of people in here in the last Nike stream? This is slow. This is a slow stream. Yeah, the last Nike stream was hype. Kind of interesting. Kind of interesting. Why is this up after hours? Maybe more people will pile in when the earnings call starts, but looks like Nike lost favor in the market. See, that would be like a... I would find that positive. Last time we got like 1,700 views on the Nike stream. We're sitting at 200 right now. I would view that as a positive. Doesn't mean I would buy it, but it's a massive difference from the last time we streamed this. Spread the word, Whammy's back up on that bullshit again. Oh. I don't know what to do right now. I don't know what to do. Hey, have fun, Moose. Appreciate you, bro. Thanks for being a member for a year, bro. That's crazy. That's wild, bro. That's wild. But I appreciate you, bro. Enjoy the golf sim. That sounds like a good time. Yeah, I don't know what to do right now. Don't know what to do right now. Can you believe next week is Christmas? Like, that's wild, bro. I can't believe next week is Christmas. It's been an interesting year so far. Been an interesting year. Some would say I'm the worst stock trader ever. Some would say I'm the best. I would probably say I'm not the greatest. Seen a lot of gains this year that just went to basically zero. This year's been like 5 years long. On God, though. On God. Best part of my year? Probably the stream. This year kind of sucked. But I don't know. This is the first year. This is the first year where I literally just like stopped giving a fuck about getting a job and focused on YouTube and streaming. And in some ways it was awesome. In some ways I probably have wasted a lot of time. So I don't know. I honestly couldn't tell you. I couldn't tell you what the best part of the year is. Couldn't tell you. Yeah, we already looked at Nike earnings. Just because you're slow and you came in the stream late doesn't mean anything, dude. We're waiting on the earnings call. You're about you're quiet. You came late and you missed the reading. That's not my problem. Best part of my year. I don't know, dude. I honestly couldn't tell you. This year sucked. This year sucked ass. Straight up. If I'm just being honest, this year sucked ass. Started my own business and now fighting to stay afloat. Thank God for credit cards to save Christmas. No, don't no. Debt is bad, my friend. Especially credit card debt. Credit card debt is ugh. 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 I hate credit card debt. I like sign up bonuses on credit cards. That's a cool aspect of credit cards, but other than that, I hate credit cards. I hate them. So much debt, what's a little more? I don't know. I just couldn't live like I just couldn't do it, bro. I just couldn't do it. I couldn't live my life like that. I'm too financially responsible. I hate debt. I absolutely hate it. It's too accepted in, especially in the US. It's too accepted to be in debt. I hate it. You wanna This is the craziest thing. I was like talking to my cousin recently, like a month ago or something like that, and he was talking about how much debt he was in. And he was saying that he had like 20,000 in debt or something like that. And then he started talking about how he was like trading stocks and shit. And I'm like, and I literally said to him, I was like, bro, you shouldn't be wasting your fucking time trading stocks. You should be throwing every dollar you have at your debt. And he got like actually upset at me for saying that. And he's like, $20,000 in debt isn't even that much. And I literally just like, I just stopped talking. If someone really thinks $20,000 in debt isn't that much, I can't even have like a reasonable conversation. I can't do it. Like that is insane to me that someone like truly in their mind believes that that's not a lot of debt. You know, if you have that on like a car note, that's different. At least you have something to show for the debt. But if you're like sitting 20 grand in credit card debt or something like that, like you have nothing to show for it, you should be focusing on paying that, in my opinion. I think the next few years of your life would be exceptionally better if you just focused on paying that. But what do I know? Apparently $20,000 isn't that much of debt, so what do I know? I must be an idiot. Honestly, I must be an idiot, straight up. I must not know what I'm talking about. I thought that was crazy though. If I'm just being honest, I thought that was wild. There's no I just it's not I don't know, man. Thinking a stock trading is going to outperform your debt, especially like credit card debt, which is usually above like 20% APR. I just don't know. I just don't know if that's a good move. I just don't think that's a good move. Just doing my part to contribute to the current economy and banking structure. Fuck the banks. Honestly, fuck the banks. Fuck the economy. I am, I'm the bank. Banks, ugh, yeah, I just fuck the banks, bro. Fuck the banks. JP Morgan can suck my ass. I don't have a mortgage or car payment. Worst case, I liquidate. See what? See, I don't get that. Then why wouldn't you like refi your house to pay off the credit card debt, and then you would have, your mortgage would be 6% APR rather than 20-30%. See, I don't. That would be confusing to me. I would be confused why you would be sitting. Oh, yeah, that's confusing to me. What is that average debt for an American? Who knows? But I don't think that's I don't even think that's relevant to this conversation. I think the relevant takeaway is the likelihood of the market outperforming your debt, especially if it's credit card debt, which, like I said, is usually like 20-30% APR. The likelihood of the stock market outperforming that is pretty fucking low. So it's just better to pay off the debt. $20K before or after inflation. I have no clue. I don't think it matters though. $20K 5 years ago is still $20K today. Might not get you as much, but still $20K. Made up bullshit anyhow. Our money's created from debt. I don't have an argument for that. You can say it's made up all you want, but you have to pay the monthly payment every month or they're going to take away everything you have. So I don't know. I'm not arguing or condoning, but it is what it is. I guess I just I hate debt. And people who like advocate it or I can't understand. I could never understand. Most people are struggling and can barely get by. If you got rid of your debt, you'd probably be able to get along a lot easier and have a little extra money for yourself. Does he know how much interest that is to him? I don't think people care. after this little bit, I already thought that nobody cared, but now talking about this here, I literally don't think anyone gives a shit. I don't think people care. Which That's fine, I'm not. You live your life how you want to live your life. I just want to see people succeed. That's all. I want to see people succeed. But if they don't want to see themselves succeed, I can't do anything about that. That's out of my control. It's the same it's the same thing with the gambling we were talking about earlier. I want to see people make money and win. Some people just want to have fun, and that's fine, do your thing. That's fine, do your thing. I would just rather see people succeed personally. I want to see one person in my lifetime succeed. That's all. I just want to see one. It can't just be me. I can't be the only person who wins. Like I just want to see one person win. That's all. I just want to see one person. If I can help one person out there, that's why I talk about the things I talk about, because I know it works. I know it'll work. It might take a long time. It might take 20, 30 years, but I know the things I talk about will work. It's just nobody's going to apply it. Nobody's going to apply it. But if one person applies it, if just one person applies it and they succeed, God is good, bro. God is good. God is good. But I guess success is also very personal, I guess. Some people don't think of success the same way I do, I suppose. I guess success for me is peace of mind, and I guess that's the best, simplest way I could put it. I like having peace of mind. One of the reasons I don't like real estate that much, but that's a whole different conversation. What's up, William? Welcome back, bro. Good to see you in here again. Oracle shit, bro. Oracle clapped. Did it ever bounce back? It's back at 180. Yeah, Oracle got wrecked. You almost did the $5 move that the options were pricing in. Kind of interesting. Good little lesson there, I suppose. But if you would have bet like those lower options, like the 58 or something, the likelihood of you winning, I don't know. Maybe you would have break even. Maybe you would have had a little bit of gain in the open. But yeah, who knows? Do I have Nike in my portfolio? No. I have GameStop, and I have GameStop, and I have GameStop, and that's it. That's all I got. Spread the word, let me back up on the motion again. Sold your Chewy a long time ago. I sold Chewy a long time ago. Wasn't a good idea. Chewy has been a ridiculous investment. I'll never say it was a good idea, but yeah, I sold Chewy forever ago. I don't trade stocks. What I hold is legacy from 5 years ago before My life took a major change. I'll be homeless before I sell my position. Why though? See, I get wanting to hold the position. Like I get that, but see, I'm only speaking by assumptions. Like I don't know your actual situation, but if you're sitting on debt that has like 20-30%, there's no reason to sit and hold stocks. I guarantee there's a bunch of positions in your portfolio that aren't going to go up 20-30% in the next year or even the next 2 years. So holding those positions is in the face of potentially making your life easier. I don't know how I don't know. See, I'm just assuming though. I don't know the actual situation. I'm just assuming based off of what I know about the world, but I sold Chewy at 15. I sold it like 30, I think. I don't remember. It was so long ago. And bought more GME. Same. Same. I'm stubborn. That's fair. That's fair. A lot of people are, my friend. A lot of people are. Especially in the, there's a lot of people in the stock market that have a stock position right now that, I'm sure there's probably someone in the chat right now, but I'm not, I'm not telling that person to fucking sell their position or anything like that. Like, I don't fucking know, but there's people out there who have shitty stock positions, terrible businesses, and they're down a lot on the stock, and they're so stubborn that they won't take the loss. I've seen it. I've been there. Sometimes you just gotta get out of your own way. Nah, the earnings call's in like 13 minutes or something like that. We could actually hop in it now. How is GameStop a scam? Please. How is that? How is it a scam? It's a stock on the market like every other stock. But when you compare it to the business, it's one of the few potentially undervalued things. So I don't know how it's a scam. Are you just saying something to just say it, or do you have a reason why you think that? So you have no good reason why you think that. Gotcha. I've made a bunch of money being a GameStop investor the past year, so. Is your opinion relevant? Debatable. To me, it's not, because I've made money as a GameStop investor. Just because you have an opinion doesn't mean it's right. You've never invested in it. You've never traded it. So how can you have that opinion? Who trades stock and isn't stubborn by nature? People who live in reality and just accept the stock market for what it is, I would say. People who know that this is just a gambling for the most part. Because I can take a loss. Cheap at this moment. Oh, okay, I see. The language barrier is I didn't know what you were saying. My bad. My bad. It's just most people come in here and talk shit whenever I say I'm a GameStop investor. So I'm always curious to see why they think the way they think, you know? Because most of the time they don't have a good reason. They're just saying something because that's what their brain has been programmed to think. So, my bad. Spain? Ah, nah. Gotcha. My bad. They just have prejudice against meme stock. Yeah, but the phrase meme stock is only a thing because of social media, the news. You know, take away meme stock. It's just a business like every other business on the market. But some of the quote unquote meme stocks are shit businesses. Some of them are decent. Some of them are good. Get rid of the phrase meme stock. It's not much different from anything else on the stock market. It's just how you view it, I guess. I guess the meme stock is possibly a phrase to get people to not research the business potentially. I don't know. I don't know. I don't know. Is Nike still selling? It's almost made that $5 move. You're pretty close. Pretty close to the $5 move the options were pricing in. The earnings call should be starting here soon. Yeah, about 5 more minutes. Anything to look at for 5 minutes? And hopefully you guys don't think when I'm talking about these things like gambling and debt and things that are against the popular opinion. I hope you guys don't think like I'm looking down on those things. And I mean, I'll admit in some ways I am, but realistically, I understand people are going to do whatever they want and they have their own experiences and views on life. Like, I'm not fucking stupid. I'm not blind to that. I just, like I said, if I can make one person change their mind for the better, that's all I want. That's all I want. And I truly believe a lot of the things I believe that aren't the popular opinion are the right thing. I think a lot of things that are the popular opinion have been put into people's minds and they're not their actual own thoughts. Maybe they are. That's just what I think. I think a lot of things people think that are the popular opinion aren't actually their opinion. I truly believe that. Doesn't mean I'm right, though. Doesn't mean I'm right. I think you have a clear head. I hope so. I like to hope I do. I try to not be biased in either direction. That's how I try to do everything in my life. I try not to be too biased. Sometimes it might sound like I'm extremely biased, but I don't know. The problem is digital games? No, it's not. Definitely not. I think digital games don't matter at all when you're looking at Gamestop. I think people should be allowed to express their own opinions. Great to have discussions. Oh yeah, for sure. For sure. I'm crazy? Then give me a oh, maybe you're talking about William, but if you're talking about me, give me a good reason why digital games matter. I want a good reason why digital games matter. I don't know if you said that to me, but if that was towards me, I would yeah, I'd be curious to see why that matters. I just got an ad to move to Canada. Nice. Blame Canada. Blame Canada. Blame Canada. Blame Canada. Nike at 20? I don't know if you'll ever see that ever. Honestly. I don't know if you'll ever see that ever. That'd be crazy. That would be crazy. Because, let's see. 94 divided by 2. I put you at 47. 94 divided by 3. So if you do, I mean, I guess it could potentially go to 30, I guess, maybe, but that would be insane to see. If Nike ever went to like 30, that's definitely a buy. That's like a no-brainer buy. But I don't think that'll ever happen. That seems almost unrealistic, especially when they're pulling in, $5 billion a year. I don't know how realistic that is. Maybe 40 or 50 could be realistic. 20, 30? I don't know. I don't know how realistic that is. Oh, is the earnings call started? Not quite. Still waiting. Should be starting any minute now, though. Doesn't matter what your position, the market decides. Sometimes the market is wrong. Sometimes the market is wrong in certain periods of time, and you could take advantage of that. Sometimes the market is wrong. The market always doesn't decide for you. Weed legal all over the world now? What? No. It's just changed for, it's basically just for, research and IRS things and banking, making banking easier. Why isn't this starting? All
Good
right.
afternoon, everyone, and welcome to Nike Inc.'s second
Enjoy.
quarter fiscal 2026 conference
God bless.
call. For those who want to reference today's press release, you'll find it at investors.nike.com. Leading today's call is Paul Trussell, VP of Corporate Finance and Treasurer. I'd now like to turn the call over to Paul Trussell.
Thank you, operator. Hello, everyone, and thank you for joining us today to discuss Nike Inc.'s second quarter fiscal 2026 results. Joining us on today's call will be Nike Inc. President and CEO Elliott Hill and EVP and CFO Matt Friend. Before we begin, let me remind you that participants on this call will make forward-looking statements based on current expectations, and those statements are subject to certain risks and uncertainties that could cause actual results to differ materially. These risks and uncertainties are detailed in Nike's reports filed with the SEC. In addition, participants may discuss non-GAAP financial measures and non-public financial and statistical information. Please refer to Nike's earnings press release or Nike's website, investors.nike.com, for comparable GAAP measures and quantitative reconciliations. All growth comparisons on the call today are presented on a year-over-year basis and are currency neutral unless otherwise noted. We will start with prepared remarks and then open the call for questions. We would like to allow as many of you to ask questions as possible in our allotted time. So we'd appreciate you limiting your initial question to one. Thank you for your cooperation on this. I'll now turn the call over to Nike Inc. President and CEO, Elliott Hill.
Thank you, Paul. Let me start by thanking all of you for joining on the eve of a holiday week here in the United States and many parts of the world. And with that, let me also recognize a Nike team that's leaving nothing on the table right now. When you work in retail, the holidays don't mean a break. When you work in sport, you often say that sport never sleeps. So when you work at Nike, you're in the thick of an incredibly busy time. With that in mind, I want to extend a special and heartfelt thanks to my Nike teammates. Thank you for your continued commitment, passion, and determination. And thank you for delivering another quarter of steady progress and building momentum. Fiscal year 26 continues to be a year of taking action to right-size our classics business, return Nike Digital to a premium experience, diversify our product portfolio, deepen our consumer connections, strengthen our partner relationships, and realign our teams and leadership. And I'd say we're in the middle innings of our comeback. We started with the Win Now actions, which was our immediate response to our biggest challenges and opportunities in our culture, product, storytelling, marketplace, and winning on the ground. And now our sport offense is the accelerator of our Win Now actions. It's how athlete-centered innovation travels across and through every country and channel to drive growth. Our focus on sport by brand is the engine of our growth. Our global marketplace is the amplifier, and it is our sport offense that connects the two. Said another way, our growth will come from sport, athletes, product innovation, sport moments, and will be scaled through countries, channels, and accounts. Turning to the quarter, I'd frame up the results as slightly better than we had anticipated 90 days ago. And while we're driving progress through Win Now, we're nowhere near our potential. I see three themes that give a better picture of where we stand right now. The first theme is that our sports teams are quickly finding their rhythm in the new sport offense. While right-sizing our classics, we're building a more diverse product portfolio, gaining the most traction in our performance business, which validates that we've got the right structure to drive a relentless flow of innovative product across our unmatched opportunities. The second theme is that we're building a healthier base for top-line growth. The Nike brand grew this quarter, and the mix was strong. We delivered 8% wholesale growth, elevated the experience in key Nike stores and Nike.com, and had fewer days of promotion. These are all positive signs. The third theme is that our comeback continues to move at different speeds. It won't be a straight line, but we're acting decisively to accelerate the lagging areas, with China at the top of that list. A year in, it's clear how important it is to stay closely connected to what's happening on the ground. From intern to CEO, and every role I've held in between, I've felt that way. Which is why, as you likely saw this quarter, I announced a change in my leadership team. All geographies will now report directly to me. I'm confident this change will result in us accelerating our Win Now actions by allowing our geography GMs to more closely shape our strategy, drive faster decisions, and influence investments. The geography that is leading the way for Nike right now is North America. As our largest business, that's where much of our focus has been. With North America, we're working with the most diverse wholesale landscape, which gives us several strategic partners to segment and differentiate our multi-brand, multi-sport, and multi-price point portfolio. The team has done an excellent job of reconnecting with partners and getting sharper on the consumers we serve and those that we seek to serve. This quarter, that approach led to over 20% wholesale growth in North America, with meaningful growth coming from existing partners. Our North America marketing team is also finding the right balance of inspiring through big team moments like the Dodgers World Series campaign after their win, or at the Chicago Marathon, where we supported everyone, from everyday runners chasing personal bests to Conor Mantz shattering an American marathon record that stood for 23 years. North America is driving a healthy, repeatable offense and showing us what winning looks like. It's a great signal for our future success in other geographies. In Greater China, we highlighted last quarter that we were facing a longer road to a healthier business. We've been implementing the Win Now actions in our key cities of Beijing and Shanghai, leading with more storytelling of our product innovations, editing our assortments, and elevating the presentation of those assortments in targeted doors. What we've done is a start, but it's not happening at the level or the pace we need to drive wider change. The next step is to further adapt our approach to fit China's unique monobrand footprint and digital-first marketplace. The reset requires a fresh way of thinking from our Nike teammates and our Nike store partners, and it will take time. Over the years, we established our premium position in market share there because the Chinese consumer believes in our ability to innovate and inspire them through sport. I'm confident we'll get back to fulfilling that promise. China continues to stand out as one of the most powerful long-term opportunities in sport. That has not changed. Expect to hear, see, and feel much more about how we'll manage the China marketplace differently this fiscal year and beyond. Both EMEA and APLA are geographies that are led through distinct, influential countries and key cities. So we're moving quickly to resourcing our teams on the ground, including sales. They're the ones who deliver locally relevant assortments, elevate the presentation of those assortments, fuel product seeding and build local relationships, create meaningful stories and consumer connections, and ultimately drive profitable and sustainable revenue in both wholesale and direct. EMEA activated their sport offense on December 1st. So they've just started rehiring these critically important revenue-generating roles in key countries. I'm locking arms with the leaders of our geographies and with Matt, who now leads sales and Nike Direct, to elevate the way consumers experience our brands. I know what it looks like when it's successful. I can see the upside. It's a brand by brand, sport by sport approach, paid off in a partner by partner, city by city, high street by high street, mall by mall approach. And every detail matters. Next, I'll share some color on how the sport offense is fueling a more diversified product portfolio through footwear, apparel, and equipment, and up and down price points. Our teams are determined to deliver a consistent product innovation pipeline. In January, Nike Running will build off of the strong start of our new stability shoe, the Structure 26, with the introduction of the Structure Plus. In Q2, running grew by over 20% for the second quarter in a row. It's up double digits in every channel, including Nike Direct. Also in January, we'll debut Nike Mind, a new footwear platform that will help athletes prepare for performance and competition, which we see as a new dimension to the Nike Training's offense. We introduced Nike Mind along with 3 other new innovations platforms in October. One of them is the new platform that traps air for warmth in an ACG jacket. The jacket inflates from a shell to a puffer based on the warmth needed. The ThermaFit Air Milano jacket will debut at the Winter Olympics in February. Also in February, at the NBA All-Star Game in LA, you'll see an example of how our 3 basketball brands and their product lineups will come together under the sport offense. The swoosh, the Jumpman, and the Star Chevron have a unified creative feel and merchandising approach with Foot Locker in LA, and we believe it has great potential to be scaled. Our Nike Skims collection will launch internationally in EMEA and APLA in the same time frame, following a successful rollout in North America. In Nike football, the deeper investment in World Cup starts now. This quarter, we brought a fresh perspective to the culture of the game in a T90 collaboration with Palace and with our Hollywood Keepers sportswear collection. And in March, our athletes will begin wearing our new apparel platform, AeroFit, in their national team kits. AeroFit is like air conditioning for the body, flowing air through the garment unlike any previous performance apparel. The innovation platform will scale across several sport dimensions in coming seasons. Overall, wholesale partners are very confident in our Nike football product. Booking units are nearly 40% higher than World Cup 22. To help sell through the commitment, we'll refresh over 100 Nike Direct and 1,400 partner doors around the world, and our marketing team is making significant investments to inspire football fans everywhere. All of these new concepts will come to the consumer in the back half of the year. As a result, our order book is improving season on season. Through the sport offense, we're on our way in product. But as I've said, near-term investments to clean up and elevate the marketplace have put real pressures on margins. Tariffs have also obviously added a significant headwind to overcome. I want to state it very clearly. Margin expansion is a top priority for me and my leadership team. While it will take time, we see the path back to double-digit EBIT margins for Nike, Inc. That formula includes a multi-branded and diverse product portfolio that is constantly refreshing and bringing in newness and seeking to drive value out of every relationship we have in the marketplace. It also requires us to be bolder and more creative in how we operate. I made another change within my leadership team this quarter, asking Venkatesh Alagira-Sami to be in the role of our Chief Operating Officer. He and his team will look end to end to ensure technology is fully integrated across the company and how we create, plan, make, deliver, and sell our world-class innovations. We see significant opportunity to get our core operations running more efficiently and more profitably. I look forward to sharing more in the coming quarters. With that, I'll turn it over to Matt to go deeper into the quarter and then offer some closing thoughts before we take your questions.
Thanks, Elliott, and happy holidays to everyone on the call. Our second quarter results demonstrated the resilience of our portfolio, with modest year-over-year reported top-line growth, despite managing headwinds from the actions we have taken to reposition our business. As I look back on where we are, 1 year from Elliott joining the company and moving forward with our Win Now actions, our business is in a better position. Sport dimensions represent a larger mix of the portfolio, led by running, and we are seeing momentum build in other sports. The Classics footwear franchises are on track to decline from peak levels by more than $4 billion by fiscal year end. Wholesale has returned to growth, with a growing order book globally in both spring and summer. Nike Digital has reduced promotional activity and is operating more strategically in sync with our partners. And inventory is in a healthy and clean position in North America and EMEA. While we are encouraged by all of this, as we have said, our progress will not be linear, as each brand, sport, and geography is recovering on a different timeline. And we continue to read and react every day in service of the long-term health of our brands. We highlighted last quarter that it will take more time to return to healthy growth in Greater China and Converse, and we expect headwinds to continue for the balance of the fiscal year. There are also puts and takes across EMEA and APLA. Meanwhile, North America and running stand out again this quarter, and we are growing more confident in our ability to sustain the momentum as we look forward. Being in the middle innings, as Elliott referenced, also means it will take time for the actions we have put into place to change the trajectory on EBIT margins. We have been navigating transitory headwinds to margin due to our Win Now actions and shifts in the business, including product and channel mix and continued inventory liquidation. As we highlighted last quarter, we are also navigating new structural headwinds from the $1.5 billion of annualized incremental product costs due to higher U.S. tariffs. This represents a gross headwind of approximately 320 basis points to gross margin in fiscal 26. And while we have begun to take actions to reduce this to a net impact of approximately 120 basis points, it is still a significant factor impacting our near-term EBIT margins amidst a turnaround in a very dynamic operating environment. All in all, we have made meaningful progress through our 5 Win Now actions, Yet there is more work to do, and our teams are hustling. For this quarter, revenues were up 1% on a reported basis and flat on a currency-neutral basis. Nike Direct was down 9%, with Nike Digital declining 14% and Nike Stores down 3%. Wholesale grew 8%. This included a top-line headwind of approximately $550 million from the reduction of our Classics franchises, down over 20% versus the prior year. This means our currency-neutral revenue grew 6%, excluding the impact of this headwind. Gross margins declined 300 basis points to 40.6% on a reported basis, primarily due to increased product costs due to higher tariffs in North America, as well as inventory obsolescence in Greater China that was not contemplated 90 days ago. SG&A was up 1% on a reported basis year over year, driven by higher brand marketing expense, partially offset by lower operating overhead. Relative to expectations, SG&A was lower due to operating overhead savings, reflecting the team's continued focus on disciplined cost management. Our effective tax rate was 20.7%, compared to 17.9% for the same period last year, primarily due to changes in earnings mix. Earnings per share was 53 cents. Inventory decreased 3% versus the prior year, with units down high single digits. In North America and EMEA, which represent almost 3/4 of our business, we have returned to a healthy marketplace. We still have work to do in Greater China, parts of APLA, and Converse. Now I will turn to the geographies and once again focus my remarks on specific context and insights of our Win Now progress. In North America, Q2 revenue grew 9%. Nike Direct declined 10%, with Nike Digital down 16%. Nike Stores were down 2%. Wholesale grew 24%, and EBIT declined 8% on a reported basis. As Elliott said, North America is our best example of executing our Win Now actions, and we are taking the learnings from their playbook to execute across all other geos. Momentum is extending beyond running into additional sports, including basketball and training. As it relates to the North America marketplace, wholesale delivered strong growth in the quarter. While the quarter certainly benefited from liquidation to value channels as we cleaned up the marketplace, we also saw a balanced contribution of growth from both new and existing partners. North America also made additional progress on repositioning Nike Digital to a more premium representation of the Nike brand, with fewer days of promotion, lower markdown rates, and increased demand at full price. Nike.com posted its best Black Friday ever this year, partially driven by strong sell-through of the Jordan Black Cat launch. Growth in the quarter was driven by running, kids, basketball, and training, with running delivering high double-digit growth in Nike-owned stores, Nike Digital, and wholesale. Sportswear saw sequential improvement, up low single digits in the quarter, with classic footwear franchises declining approximately 20% year over year. Inventory declined mid-single digits versus the prior year, with units down double digits. Closeout units declined double digits, and the mix is very healthy. Last, I want to point out that North America gross margins only declined 330 basis points versus the prior year, despite 520 basis points of impact from new U.S. tariffs. This gives us confidence that our Win Now actions are working, profitability is recovering, and we are on the path back to sustainable, profitable growth. In EMEA, Q2 revenue was down 1%. Nike Direct declined 3%, with Nike Digital down 2% and Nike Stores down 5%. Wholesale was flat. EBIT declined 12% on a reported basis. EMEA has maintained a healthy marketplace, although promotional activity has been heavier than expected. We saw growth in Central and Eastern Europe and the Middle East, offset by slight declines in Western Europe. In Q2, our performance business continued to build momentum, driven by double-digit growth in running. We also saw growth in training and sportswear. Sportswear growth was driven by apparel, with footwear flat, as a mid-20s% decline in classic footwear franchises was offset by growth in Air Max and the look of running styles. Inventory grew double digits versus the prior year, with units flat, and the spread primarily due to foreign exchange rates. Closeout mix in the geography is healthy. In Greater China, Q2 revenue declined 16%. Nike Direct declined 18%, with Nike Digital down 36% and Nike Stores down 5%. Wholesale declined 15%. EBIT declined 49% on a reported basis. Our priority in Greater China is to create greater brand distinction through sport and innovation, leveraging deep local insights in a premium and more consistently managed integrated marketplace across both physical and digital channels. Over the past several seasons, we have faced consistent challenges with declining store traffic, softer in-season sell-through rates, and higher levels of aged inventory across the marketplace. Our brands have consistently been off price for consumers, especially in digital, affecting our premium positioning across the entire integrated marketplace. These challenges resulted in a higher mix of off-price sales with higher markdowns, higher sales-related returns, higher wholesale discounts, and higher obsolescence charges to clean marketplace inventory levels. This cycle has had a significant effect on the profitability of Greater China. This quarter, we took the following actions in China. We continued to obsess our initial Nike store pilot, which delivered encouraging results this quarter, with better traffic and comp sales growth relative to trends across the broader fleet. We focused on sport, combining new product innovation with elevated retail presentation, and we saw running continue to grow in the quarter. We were less promotional during 11/11, resulting in an approximate 35% decline versus the prior year, in line with our plans. We accelerated returns of aged inventory owned by partners and wrote off both partner and Nike inventory in the quarter. We reduced Nike inventory by mid-teens versus the prior year and by 20% in units. And we reduced our sell-in plans for spring, and we cut our buys for summer to improve sell-through and full price realization. We will need to make further shifts in the integrated marketplace to break the cycle that we've been managing through. There is more work ahead to scale the momentum of the initial store pilot to more doors, to elevate our brands across all digital platforms, and to clean up excess product in the marketplace. We expect headwinds to continue, but we are working to set the foundation for a return to growth in this important geography. In APLA, Q2 revenue was down 4%. Nike Direct declined 5%, with Nike Digital down 10% and Nike Stores up 1%. Wholesale was down 3%. EBIT declined 15% on a reported basis. APLA continues to deliver mixed results across countries, with positive results in Latin America more than offset by headwinds in Asia-Pacific countries. During the quarter, the team leveraged promotions to make progress on pockets of excess inventory in the marketplace. In the quarter, running grew double digits, and apparel grew mid-single digits overall. Inventory grew double digits versus the prior year, with units up mid-single digits, though we saw pockets of improvement year over year. Now I will turn to our third quarter guidance. We continue to operate in a dynamic environment, both for consumers and our global business, and we remain focused on what we can control to make forward progress for the long-term health of our brands. Our outlook reflects our best assessment of these factors based on the data we have available to us today. We expect Q3 revenues to be down low single digits, with modest growth in North America as we see reduced liquidation activity versus prior quarters, performance in Greater China and Converse similar to Q2, as well as a 3-point benefit from foreign exchange. We expect Q3 gross margins to be down approximately 175 to 225 basis points. However, excluding the 315 basis point impact of higher gross product costs related to new tariffs, gross margin expansion would be positive in the third quarter. We expect Q3 SG&A dollars to be up low single digits due to higher demand creation and investments in our sport offense. We expect other expense, net of interest income, to be an income of $0 to $10 million in the third quarter. Now I'll close with a few final thoughts. We are making progress in the areas we focused on first, and we are increasingly confident in our path forward, led by momentum in North America. We are making the investments required to position our full portfolio for a recovery and making decisions in service of the long-term health of our brands. Operationalizing the sport offense, elevating the marketplace, and rebuilding our key city teams are critical priorities to return to sustainable, profitable growth across all brands, all sports, and all geographies. Finally, as you heard from Elliott, we are focused on improving the profitability and operating efficiency of our business and realigning costs while also investing to reignite growth. We look forward to sharing more in upcoming quarters. With that, I'll pass it back to Elliott.
Thank you, Matt. This quarter, the Los Angeles Dodgers reminded us what it takes to win at the highest level. Back-to-back World Series titles, something no team had done in 25 years. They gave us a Game 7 for the ages. They didn't take the lead until the 11th inning. Down 3-0 early, every outside voice said, "It's over." But they kept chipping away. Every setback became a lesson. They leaned on each other. They believed when belief was hard. Manager Dave Roberts shared those insights with us at the opening of our new Nike store in Portland just days after that win. He talked about what guided his decisions, not just analytics, but trust, feel, and sacrifice. That included putting in bench player Miggy Rojas, who hit an improbable home run in the ninth, followed by a bases-loaded throw to the plate in the bottom of the inning. With one more out to go, Roberts swapped in Pajas, who immediately made a leaping, game-saving catch. Every decision mattered, and every player was ready when called upon. But the boldest move he made was managing Yoshinobu Yamamoto's innings, our Nike guy and World Series MVP, who won a historic 3 games in the series. The day after throwing nearly 100 pitches, he surprised everyone to close out Game 7. That wasn't just effort. That was a statement. I'm leaving nothing on the table. It inspired the entire team. That's what greatness looks like. It's not about perfection. It's about perseverance. It's about sticking to the plan and performing when the pressure is highest. Nike is in a similar moment. We're the industry leader. Expectations are high. And yes, we face pressure and setbacks. But like the Dodgers, we're leaning on each other, focused on the fundamentals, making the hard calls, and building for the long game. Because in the end, greatness isn't promised. It's earned. And we're ready to earn it again and again. Thank you. Now Matt and I will take your questions.
We will now begin the question and answer session. To ask a question, press star, then 1 on your telephone keypad. We kindly ask that you please limit your initial question to 1. Our first question will come from the line of Matthew Boss with JP Morgan. Please go ahead.
Great, thanks. So, Elliott, you led both in the release and on the call by citing the turnaround is in middle innings. Could you elaborate maybe where you've scored runs so far versus where you have opportunity remaining, and just your overall confidence today that you can win the game? And then, Matt, if you could just elaborate on the components of gross margin that you cited. I think you cited underlying expansion, excluding tariffs, for the third quarter, and just the progression that we should think about moving forward.
Great. Thank you, Matthew, and appreciate the question. And let me start by saying the path back to sustainable, profitable growth is going to go through our win now actions, and they will be accelerated by our sport offense. And I would also say that I'm incredibly inspired by the way our teammates have responded to the actions in the new offense. The drivers of our growth right now for Nike, they came through the win now actions, which were our near-term actions around culture, product, storytelling, the marketplace, and winning on the ground with consumers. But it's our sport offense is the accelerator of those actions. It's how we take athlete-centered innovation, and it travels through every country, channel, and account to drive growth. And the sport offense is what's bringing the balance to our portfolio. We have a relentless flow of innovative product now coming across our three brands through multiple sports, performance and sportswear, men's, women's, and kids, and we pay it off across 190 countries. So we've had some meaningful progress, Matthew, over the last 90 days. Nike brand is growing. Sport is growing, with running leading the effort there at up over 20% and taking market share. We're beginning to diversify the portfolio, right-sizing our classics. As Matt said, we declined roughly $4 billion from its peak. North America grew 9%. Wholesale grew. Our order book for spring and summer is up. So we have a healthier base from which to grow profitable, sustainable growth. So in terms of the middle innings, specifically, I think the best way to think about it is that we have our businesses, the dimensions of our businesses moving at different speeds, and the timelines are going to vary by geo, channel, and sport dimension. So by brand, as an example, Nike is off to a strong start. We had growth this quarter. Jordan, I think, still has some room to dimensionalize beyond streetwear into things like Jordan basketball, Jordan training, etc. But we've seen some real good progress around streetwear there. We're resetting the marketplace for Converse under new leadership. In terms of product, performance is growing, but sportswear is still in the early stages of diversification. We've done a great job of right-sizing the franchises, but we still need to diversify that portfolio, middle innings. And then from a geography, North America's leading. EMEA just transitioned to the sport offense, followed by APLA, which, as Matt pointed out, had some mixed results. And then China has our longest road ahead. And that's why we're sitting here saying we're in middle innings. Great success in North America, work to do in China. But all I would say here, just to sort of close it out, Matthew, is the middle innings, while we keep saying we're in the middle innings, I will say this: the win now actions and the sport offense is working, and it will lead us back to profitable, sustainable growth.
And Matt, as it relates to margins, I would just say that, our business is still in a transition in the middle innings, and we are navigating through both transitory and structural headwinds across the portfolio. But as Elliott said, we've made meaningful progress through the win now actions, and you can really see that in the progress that we made in North America in Q2. North America's gross margins were down 330 basis points, despite more than 500 basis points of a headwind to product costs due to the gross impact from the new tariffs. And so that's a marketplace where we're furthest along in repositioning digital. We're back to growth in wholesale, and we've made the most progress in cleaning up the marketplace. And so as I look ahead to Q3, we guided our margins to be down 175 to 225 basis points. That includes 315 basis points of higher product costs related to new tariffs. And so we expect expansion, excluding the impact of new tariffs, really reflecting the beginning of recovery of the transitory headwinds at the corporate level. And we continue to expect to see momentum building in North America, given where the state of the marketplace is. We're watching promotional activity in Europe, but inventory in Europe is in a healthy place. And then, as I mentioned, there's puts and takes across APLA. And we expect the trends in Greater China and Converse for Q3 to be relatively in line with what we saw in Q2 as we continue to take actions on both of those resets. And so I would say that overall, we're encouraged by the momentum and the progress that we're seeing, but we've still got some work to do.
Our next question will come from the line of Ike Boruchow with Wells Fargo. Please go ahead.
Thanks. Good afternoon. Thanks for taking the question. I guess maybe for Elliot, maybe a similar type of question as Matt's, but you've mentioned the recovery won't be linear several times over the past year or in transition, and it totally makes sense. I guess I'd like to know if you're able to share when you believe that maybe that caveat won't be needed anymore, and you'll be able to better kind of hold momentum, create better visibility for investors on what's clearly becoming a reset base of revenue and earnings. Thanks.
Yeah, thanks, Ike. Here's the best way that I would think about it is, each geo. Let's first start with the brands. Each of the brands are at different stages in terms of diversifying their product portfolio. We just got into the sport offense in September, so we got these small cross-functional teams. We're getting them up and running as fast as we can. Same thing's happening in the countries and key cities around the world. That's happening at different stages. And so we believe in the strategy, and we know that the path back to profitable, sustainable growth is through the win now actions. We also believe in the sport offense and our ability to create beautiful products and then pay it off in an integrated marketplace. We just have 3 brands in multiple sports and 4 geos in 190 countries, and they're all operating at different timelines. And so that's the reason why we keep saying that we have different timelines, and it's just gonna take time. So I will just sort of point to the place we focus first, which is North America, and we're having great success there. So we're confident in our path forward.
Yeah, and I just would add, Ike, that we said on North America that we're growing increasingly confident that we can sustain that momentum. I would also say that we've said that we believe we're going to drive modest growth in wholesale this year, starting to have more confidence in that dimensionality of the business. But what you also heard on the call today was that we took some unplanned actions in Greater China as we're navigating real time through some of the challenges that we see in some of the businesses that are under reset. And so, we're going to continue to take it 90 days at a time for now to give ourselves the flexibility to make the right decisions for the long-term health of our brands. And, much of what we said today is consistent with what we've been talking about for the past couple quarters.
Our next question will come from the line of Bob Drbul with BTIG. Please go ahead.
Hi, good afternoon. Just if I could ask 2 questions. I think the first one is, on the commitment and sort of the focus on the return to double-digit EBIT margin, it's a big priority for you guys. Is there a timeline at which you could talk to, when you think you'll get there? And then I think the second question is just like part of that, I think, is on China, long road ahead, Q2 revenues similar to Q3, similar to Q2. How deep a reset do you think is necessary in China? And are we near a bottom in revenue or EBIT declines in China? Thanks.
Okay, so Bob, let me do this. You stuck in 2 questions on me, but here's what I'm going to do. Let's take EBIT first, and then we'll take China, because I don't want to confuse the two. But let me first just say that improving margins continues to be a top priority, and I said it before, and I'll continue to say it. We do see a path back to double-digit EBIT margins. Margins are under pressure for 2 reasons. First, the driver of our win now actions, when that we've intentionally taken to clean up the marketplaces around the world. The second is the impact of tariffs, which were implemented after we activated the Win Now actions. And we're seeing the benefits of us taking those actions. We've said it, North America back to growth, running back to growth, wholesale up, the order book, and we have a healthier base for top line growth moving forward. In addition to the top line growth, we also have opportunity to improve the efficiency and productivity and how we operate the business. And we're going to share more in the coming quarters. Matt, I don't know if you want to add anything to that.
I would just say something that will sound familiar. You know, we're clear on what the path back looks like. It starts with growth. And I think that, you know, the investments that we've made to drive the Win Now actions are paying fruit. You see it with a second quarter of top line growth, and specifically the growth that North America was able to deliver in the quarter, which is where we'd focused our demand creation investments and where we'd focused our investments in our commercial teams in order to be able to get back on the offense in the marketplace. Part of what's going to drive expansion is recovery of our full price mix. As we continue to manage the off-price, full price mix in the marketplace. And again, I point to North America where we've now cleaned the inventory in the marketplace and we're starting to see margin expansion, excluding the headwind of tariffs. Another big opportunity for us is to leverage the supply chain costs as we grow. And that's been a meaningful headwind over the last year as our business has reduced in size. And growth will help us with that. But there's also a lot of a focus and attention on that as well. And then the last piece of it, I would say, is the work that we're doing to be disciplined in the way we're managing costs across the business. We've been investing in marketing, and we feel good about where we've leveled our brand marketing investment. We've locked in some of our most important team franchises for the long term, which strategically puts us at a great position in the world of sport. But we've been very focused on managing operating overhead, and we will continue to do that. And we look forward to sharing more about that in the upcoming quarters.
Okay, I'll jump back now and let me take China. China continues to be one of the most powerful opportunities in sport. We're confident that the Win Now actions and the sport offense will allow us to continue to invite 1.4 billion consumers into the world of sport, fitness, and the lifestyle sport. So we see China as a big opportunity. With that said, it's clear that we need to reset our approach to the China marketplace. And it's going to start with structure. The GEOs are now reporting to me. Angela, who's our GM in Greater China, is now part of my SLT senior leadership team. And I look forward to working with her and the rest of our team more closely. Let me share a little bit of the diagnosis of where we are. And we believe and firmly believe and will always believe that our growth will come through sport. But the reality is we had become a lifestyle brand competing on price in China. We also reduced the feet on the ground, people on the ground. And as you know, it's a mono-brand marketplace with thousands of 5,000 doors with the teams working the presentation of our product at retail. And we weren't making the investment in our store fleet. So our stores aren't compelling. And as Matt mentioned, the cycle that it started to feed itself, soft demand leading to consistent promotions and then impacting profitability. And we did signal last quarter because of these structural differences that China would be on a different timeline. So we're taking action. We're cleaning up the marketplace of aged product. We're getting back to the basics of retail, consumer right assortments, better storytelling, and elevated visual presentation. We're increasing investments in Shanghai and Beijing, resetting key doors. Matt referenced those in his prepared remarks. We're seeing early success. But I'll say this, it's not happening at the pace we like. So we have more to do. It's going to take a fresh perspective, a new approach, and we will have to come through this with new capabilities as well. And we're working closely with our partners at Pao Shan and Top Sports to adapt our approach. But I'll just sort of end here. I've done this before. I have a deep history in the market. We've diagnosed the problem, and we will return Nike to a beloved premium and innovative brand in China.
Our next question comes from the line of Anisha Sherman with Bernstein. Please go ahead.
Thank you for taking my question. Elliot, at the start of 2025, you expressed your strong confidence in the pipeline for running, and you laid out this 3x3 framework that you discussed with partners. And we're now seeing strong acceptance in the market, and the business is growing over 20%. As you look across the other verticals, I know you talked about new innovation across all of them, but how do you see the phasing of the growth? And are there particular areas where you have that same level of conviction that you had in running a year ago and where you expect the business to ramp very quickly versus some that are a little slower?
Yeah.
And then a follow-up on North America. Matt and Elliot, you both talked about the contribution of new distribution and same-store sales on the wholesale growth. Are you happy with the mix of partners you have now, or is the goal to continue to ramp up new distribution points into next fiscal year as well? Thank you.
Okay. Anisha, thanks for the questions. I'll start. Let me take the product portfolio piece first. Here's what I'd say. The teams are doing a really nice job of building a more diverse portfolio. You can start to see it in our numbers. We do have an unmatched portfolio with depth and dimension across performance and sportswear, men's, women's, kids, footwear, apparel, accessories, and up and down price points. And we believe that moving into this sport-obsessed teams through our sport offense, we're already starting to see the pipeline and the flow of innovation coming through across the three brands, Nike, Jordan, and Converse. So we know when we focus on sport, we win. You called out running already. I will hit very quickly that we launched Vomero Premium as part of that 9-box construct that you referenced this quarter and had very good sell-through. And we also launched Structure 26, our new in our stability silo, and we're launching Structure Plus next month. So we're continuing to fill that out. But it's not just about footwear, it's also about apparel. We have some really strong apparel coming through in running as well. So we will continue to grow and dimensionalize running as Nike running as a opportunity. In terms of other business opportunities, global football, it's probably the furthest along in terms of their construct. We have 3 silos there, footwear silos, the Mercurial, Tiempo, which will launch in Q3, and then our Phantom, which had a really strong launch in Q1. So 3 silos, also connecting deeply with each of the consumers that play a different style of football. Apparel and footwear also dimensionalizes that opportunity. National team kits, World Cup, really strong read there, 40% up on the order book versus World Cup 22. Training, 24/7 apparel, continuing to diversify the footwear. I see that coming. That's not yet hit, but we feel good about what's coming from training and footwear. Skims had a successful launch. We launched in EMEA and APLA next quarter. At basketball, we're dimensionalizing through women's, Sabrina, Asia, and now we have Caitlin coming. And our men's business continues to do well. Jaw sold through extremely well. And then we just launched the GT Future, and we had kids lining up for that shoe. So starting to dimensionalize beyond, or dimensionalize the portfolio. And then I could dive into innovation a bit more further out. I think it's getting stronger every season. We're investing significantly in our Nike Sports Research Lab, and we're being intentional about connecting that R&D into our sport offense. And we announced a few big, which I talked about, product opportunity or product innovations, Nike Mind, and then AeroFit. So I feel good about the pipeline, and we see the response in our order book, which is up for the back half of the year.
Maybe I'll jump in on Marketplace, Elliot, and then you can add to it. Anisha, we feel good about the North America marketplace and our partners. We've got great partnerships. We've been working incredibly close with our partners as we're working to elevate the marketplace and reposition the Nike brand in a segmented and differentiated way across accounts and across the marketplace. Tom Petty and the team have just been crushing it in terms of leading us through our Win Now actions. And when I look at the order book for the back half of the year, the order book is very balanced in terms of growth between new partners and existing partners. And so we feel great about the quality of the growth that we see in the back half across a balanced, integrated marketplace. Our teams are always looking for opportunities because our marketplace strategy is a consumer-based strategy. We want to be in the path of the consumer, leveraging our partners across digital and physical, owned and partnered. And so I wouldn't rule out the possibility of it, but I wouldn't say that that's what's needed in order for us to be able to sustain the momentum that we see in North America.
I was going to add to it, but you've already embraced your new job, right? I think the only thing that I would add to it, Anisha, because I think Matt did such a nice job, is that Tom and the leadership team have done a really great job of just right-sizing the product, getting the marketing going. And then I would say the thing that's the big difference is the setting 3-year visions with each of, and this is into the details, but it matters, setting 3-year visions by account on the consumers that we want to serve by sport, and then bringing that back to 1-year plans and then to seasonal plans. And that's how you get back to driving profitable, sustainable growth with the partners. And again, the team's done a really nice job. So leading the way, and therein lies the opportunity in the other geos for us. We've got to get the other geos keeping pace, and we're working hard to do just that.
Our next question will come from the line of Jonathan Komp with Baird. Please go ahead.
Yeah, hi, good afternoon. Maybe one more on China. Do you think the North America experience where, Elliot, we saw, maybe 2 or 3 quarters of severe pressures after you came in and accelerated the win now actions, followed by now a return to growth and healthier conditions? Is that a reasonable timeline or playbook to think about China? And then just maybe bigger picture, if you are viewing some of these headwinds currently in resets more as temporary, maybe just expand on why not providing maybe 2 or 3 year out targets or a little bit more specificity around the timeline to get back to double-digit margins. Thank you.
Yeah, in terms of China, what I said earlier is we've taken actions, we're cleaning up, we feel good about having a handle on what has happened in China, and more importantly, what we must go do. And it's going to take a fresh perspective and a new approach, and ultimately some new capabilities. And so, and we're working with and through partners, which again, that's where it gets tough to put an exact date on it. But we're confident in the path forward and the team that we have in place, and we're ready to get that business moved and turned as quickly as we possibly can.
John, I'd just say on your timing question, we're operating in a dynamic environment for both consumers and for a global business. And we're trying to turn around our business across 3 brands, multiple sports in 4 geographies. And as a result of that, it's complicated what we're trying to do. We're encouraged by what we've been able to do in North America. And I think we've got a clear path of what we need to do across the other dimensions of our business. But we're reading and reacting every day. And it's important right now that we've got the flexibility to be able to make the right decisions every week as we're trading the business in order to be able to establish the long-term health of our brands. And so for the near term, we're going to continue with this consistent practice that we've been doing. And as our confidence grows, we will certainly share greater insight into how we're thinking about the longer term.
Our final question will come from the line of Simeon Siegel with Guggenheim Securities. Please go ahead.
Thanks. Hey, guys. I hope you and your families have a very happy holiday New Year season. So, Elliot, just to follow up a little bit, the North America revenue growth, it was just such a big number, even before accounting for the still large Classics reset. So can you just speak to what product is growing domestically so much that it was enough to accelerate that revenue growth this much and just way more than offset the ongoing reset? And then, Matt, it feels like the growing wholesale penetration should help that operating overhead, maybe structurally. So just curious if you could give us any thoughts where operating overhead goes. And then as you think about that opportunity, is the idea that you can take a portion of that and fund it back into demand creation, which has always been one of your key competitive advantages. Thanks, guys.
Yep. Simeon, thanks, and also wishing you and your family a happy holidays as well. In terms of North America growth, running obviously is a big piece, and it's not just growth, sell in. What we're encouraged by is sell through. We're actually taking market share, so we're feeling good about that. Global football, soccer, we're seeing growth there. We're seeing growth in training. Skims as well would be another one I'd call out. And then basketball. The team's doing a really good job with basketball right now. And again, I touched on a few, but like the GT Future this weekend was phenomenal. And while sportswear is not growing, they've done a really nice job of right-sizing sportswear and starting to diversify the portfolio across the look of running, which is primarily driving it. But we also have some footwear on the women's side in sportswear, Air Max Muse and the Superfly that's doing well. And then, of course, Jordan. I've got to call Jordan out. And when we speak about North America, they've done a really nice job. And we had a great sell-through of the AJ4 Black Cat. We're getting back to telling stories. By the way, that was our largest Black Friday ever, that Black Cat was, launch ever. And then just recently, it's not in this quarter, but the AJ11 Gamma, we had people lining up for that shoe again, which is fun to see kids lining up for sneakers again. So I think the team's done a really nice job of making certain that they're running a complete and balanced portfolio across the brands and sports.
Simeon, I'd just add that the growth that we delivered in North America in Q2 was certainly strong. And if you look at our guidance for Q3, we said that we expect modest growth in North America, and you can really sort of connect the dots between how much liquidation fueled the growth in Q3 versus what's going to be great comp full price growth as we get into the third quarter. And so hopefully that helps you connect the dots a little bit between the second quarter and the guidance for Q3. In terms of your question on cost leverage, you're absolutely correct. Growth creates leverage on the cost structure. Wholesale growth, in particular, creates meaningful growth on the cost structure, led by unit growth. And you see it not only in the supply chain costs, where you're shipping pallets of product to partners versus shipping one-on-one units to consumers, but you also will see it more broadly across our operating overhead. We're certainly focused on continuing to prioritize our investment in demand creation. I wouldn't lead that to believe that we've necessarily decided we're going to go much higher than the 10% of revenue at this point in time, because we feel like that gives us a good amount of investment to be able to continue to drive our brand forward. But if I'm prioritizing between the two, we certainly want to have more flexible liquid demand creation to create big moments that impact consumers, and to be able to activate that on the ground in key cities. And so we're going to continue to tightly manage costs on the operating overhead side. As Elliot said, we've got a number of things that we're looking at here, and we look forward to sharing more in the coming quarters.
And that will conclude our question and answer session and our call today. Thank you all for joining. You may now disconnect.
Hey, double prizes. What's up, bro? What's up, bro? Thanks for the $20. I appreciate that, bro. Good to see you in here again. Much love, bro. I assume you hit those puts on Nike. They were relatively cheap. I think those 58 puts were like $30 a piece. Those will probably open at like $200. Pretty solid. Pretty solid option play, I'd say, for, normally I don't really care about options, but I was looking at that before the market closed. They were quite cheap. Pretty interesting. But thank you guys for being here. Thanks to everyone. Make sure you hit the like button on your way out. And yeah, thank you guys for hanging out here. Happy holidays. I don't know when the next earnings report is. I don't think you have earnings for a while, so might be a minute before we get like an earnings stream, but I still stream almost every day, so hopefully I'll see some of you guys again. Hey, enjoy your evening, double prizes. Much love again. Thank you for all the donations you've given the past couple streams. I really appreciate it, bro. Thank you. God bless. God bless. Enjoy your holidays, man. My guy. Enjoy them. Enjoy your holidays. Wonder if there's any videos or something to watch before we go. Nothing there. Nothing I want to watch on Penguins. Yep. Nothing really to watch, so unless you guys got something to talk about, I'm out of here. I'm out of here unless you guys got something. Because there's like no news or anything to talk about. You do supposedly have a record quad witching tomorrow, so we'll see. We'll see what happens tomorrow. Whether it means anything or not. Hey, later, Ruben. Appreciate you always supporting the stream, my friend. God bless. I don't know who else is here, but I'm out of here. Thank you to all the OGs. Thank you guys for always supporting the stream. Thanks to anyone who's new. Thanks for giving the stream another chance. I'll stream tomorrow for a little bit, probably like an hour or two. You know, same time. Same time as always, or around that time, I guess I should say. But, yeah. Thank you guys. God bless you. I'll see you tomorrow. Peace!